So guys, now that we have officially made our way into September, I think it's time for another dividend portfolio update. And let me tell you, we saw a huge jump this last month. It was actually my best month of performance in a long time. At any rate, in this video, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in September. Now, before we get into all of that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys this last month? I want to hear all about it in the comments below. Anyway, getting into how my portfolio performed over here using my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. And what we're looking at right now is just my main taxable brokerage account over on Charles Schwab, which as we can see is valued at $88,913. And every single year, this account is bringing in $2,984 in dividends. So we still haven't reached $3,000 in annual dividend income in the taxable account. We're getting pretty dang close, and we probably would have been there already, but to be honest with you, it was a pretty light month of buying in the taxable account. I'll talk a bit more about why that is later on in the video. But going back to this account's current value for just a moment, this $88,900 is about $6,500 more than the account value from this time last month. So like I said, it was just a crazy month of performance. We saw a huge jump. And if we look at the breakdown for the month over here on Snowball Analytics, we can see that the month of August brought about a 6% gain. So very solid. This is definitely my best month of performance all year. And if we zoom out over the last 12 months or so, we'll see that even in this time period, this is my best month of performance. So August was a hot month for stocks. And if we scroll up just a little bit, guys, and compare my portfolio's returns to those of the S&P 500, to the NASDAQ, and to SCHD, I actually outperformed everything this last month. I beat the S&P by 2.1%, outperformed the NASDAQ by almost 3%, and it just barely beat out SCHD by 0.1%. Usually there's a much larger spread between my portfolio and SCHD, but not in the month of August. At any rate, if we zoom out looking at the year-to-date performance, it looks like I'm still just barely outperforming the S&P by 0.25%. I am underperforming the NASDAQ by almost 0.7%, and we are crushing SCHD by 7% right here. So overall, I'd say pretty strong performance so far in 2025, and zooming out once more over the last year, we are neck and neck with the S&P, less than 0.1% spread between us and them. Looks like we are underperforming the NASDAQ by about 4%, and we are still crushing SCHD by about 12%. So I'm pretty happy with that performance. And overall, guys, like I said, this was my best month of performance in a long time. And there were a few stocks that drove a lot of this performance, which is what we'll be taking a look at next. But before we get to that, I want to take a second and tell you about Public, which is actually the sponsor of today's video. So I just moved my Roth IRA over to Public, which is offering a pretty killer deal right now called the IRA Triple Play. For a limited time only, they're offering a 1% match, and you can earn that 1% 3 different ways. First, you can contribute to your IRA through Public and get a 1% match without accounting towards your IRS contribution limit. You can also roll over an old 401k and get the match there too. Or if you've got an IRA at another brokerage like I did, you can transfer it over to Public where they'll match 1% of the full balance. My IRA was valued at around $19,000 when I made the transfer, so I got about $190 from the match, which was very cool. And another very cool thing is that Public will even cover your transfer fees, so you don't have to worry about that. Now, the 1% match is just one of the reasons I'm so excited to use Public. They also have some really great tools like the Income Hub here that shows how much income your portfolio is generating over time, which is super helpful if you own dividend stocks or any other income generating assets like I do. And speaking of generating income, I'm also moving the cash in my high yield savings account over to Public because their high yield cash account pays 4.1%. And I like that I can automate everything through their investment plans. I can automate recurring deposits, recurring buys, everything. So my portfolio can continue to grow without me having to lift a finger. All in all, I think Public has something to offer for every investor. The platform is both simple and powerful to use, and the 1% IRA match is just the icing on the cake. If you're thinking about rolling over your IRA or your 401k, or if you don't have a retirement account and you've been thinking about starting one, which everyone should, then now's a great time to do it. Just click the link in the description of the video or in the pinned comment, or just scan this QR code right here to learn more about Public's IRA Triple Play and take advantage of that 1% match while you still can. All right, guys, now getting back to it, getting into my best and worst performing stocks for the month, by and large, my top dog was Clear Secure, who, as we can see, had an incredible month. The stock was up 21.5% just in the last 30 days. And looking at the year-to-date performance, it's up even more. It's up 37% so far in 2025. And if we take a look at my position, I'm now up quite a bit with Clear Secure. I have 128 shares at an average cost of $28.91. So right now it looks like I'm up about 26% just looking at the share price. And I get a little boost from the dividends, not much because I haven't held this position for very long. It hasn't been a full year yet, but still up 27.5%, and we're now seeing a gain over $1,000. Anyway, moving on, my second best performing stock for the month was Lowe's, who also saw a crazy double-digit gain. The stock was up 13.35%. And if we look at the year-to-date performance, Lowe's is up not quite that much. It's up 5.5% so far for the year. So all of their gains and then some have come just in the last 30 days. And looking at my position real quick, I have 16.4 shares at an average cost of $194.50. And if we scroll over looking at my returns, this is going to leave me up almost 33% just looking at the share price, and almost 40% including dividends. So looking good in both departments. But anyway, my third best performing stock for the month was none other than Avi. And although they didn't see a double-digit gain like the first two, the stock was still up about 9%. So very strong performance. And if we look at the year to date, it's up even more. It's up almost 20% actually so far for the year. And I'm seeing just an incredible gain on this one. I actually think we talked about it either in the last video or one of the recent ones, but I have 10 shares at an average cost of $114.20. And looking at my returns, I'm up 84% just looking at the share price. And on a total return basis, I'm up 106%. This is my only other position besides Williams-Sonoma where I'm seeing a triple-digit gain. But anyway, those three stocks did really, really well for me this last month. And truth be told, I didn't have any that were in the red, at least not a meaningful amount. The only holding of mine that saw any losses at all was Blue Owl Capital Corporation, who was down 0.7% for the month. So nothing too crazy there. And if we look at the year to date, it's, pretty much the same. It's down 0.8%. So nothing crazy either way. All right, guys, now getting into all of my buys for the month, pretty much all of these purchases right here came from reinvesting the proceeds from selling out of Starbucks, which you guys know I did at the end of July. But one of the stocks that I bought with those proceeds was Procter & Gamble. In August, I picked up 7 shares at an average cost of $151.52. So pretty decent price. It's up a little bit since then. I also added quite a bit to WP Carey for the first time in a long time. I added 18 shares at an average cost of $65.52. Also up a little bit with those. And then last but not least, I picked up 6 shares of Zoetis at an average cost of $147.49. And as you guys know, I've been buying Zoetis very heavy these last few months, ever since I started the position, and this last month was really no exception to that. And with all of that buying, Zoetis has now become the second largest position in my portfolio. It now makes up 9.3%, right behind Visa at about 9.4%. So these two right here are pretty neck and neck. And I think Zoetis at this point is a pretty full position for me. I like the company. I love the company actually, but because of its size right now, I don't see myself adding much more to it for the time being. But anyway, those were the 3 stocks that I added to in the taxable account and over in the Roth IRA. I did my weekly dollar cost averaging into SCHD and VU and went heavy on SCHD in August. I added almost 24 shares at an average cost of $27.15, which if we look at my position over here leaves me with 458 shares of the Holy Grail of dividend ETFs, which means we have officially hit our goal for the year. By the end of 2025, I wanted to be at 450 shares. So we can cross that off, and now we are going to see if we can get to 500 by the end of the year. We'll see what happens. So overall, guys, I'd say it was a pretty light month of buying. Like I was saying earlier in the video, I've kind of just been stacking up cash in my brokerage account, at least over these last couple of weeks. And the main reason for that is because I just don't see a whole lot that looks interesting to me right now. I mean, as we established, things have been pretty dang good in the portfolio, but that also means that stocks are getting more expensive. I could buy some more Realty Income or Blue Owl Capital Corporation or Procter & Gamble that really aren't too far off from my cost basis. I mean, Zoetis as well. I'm only up 2.6% on this position. But like I was saying with Zoetis, I'm totally fine with this position size right here. And I feel the same way about Realty Income. It's 7% of my portfolio, but if we scroll over looking at the income, it's almost 12% of my overall income. So that's a little bit heavy for me. Same thing with Blue Owl Capital Corporation. It's already 9% of my portfolio's income. So I'm pretty content with that. And then Procter & Gamble's 8.4% 4% of the portfolio. So this has become a pretty heavy position for me as well. So with that said, I either need to seriously consider adding a new position to my portfolio. And there are a couple interesting ones out there that I kind of have my eye on. So it is a possibility. So I either need to do that, or I just need to continue saving up cash for now and wait for better buying opportunities in the portfolio. At least for now, I'm probably sticking with option B, but we'll see what September brings. I mean, really anything can happen. But as I'm recording this video, there's just really nothing that looks interesting to me in the portfolio right now. Anyway, now moving on and taking a closer look at my Roth IRA, we're actually inside the public platform right now. So we are looking at it directly from the brokerage. And as we can see, the account is valued at just over $21,000. We made some great strides this last month. This account was up about $1,000. It was up about 5%. So some really strong performance coming from the Roth IRA. And as far as the income goes, this account is currently generating $573 every single year. And it looks like September is going to be a pretty nice month of dividends for the Roth IRA. I'm going to get a nice SCHD payment for almost 120 bucks. And with that said, if we take my main taxable account, which is valued at almost $89,000, and add that to this $21,000 Roth IRA, that's going to bring the total combined portfolio value to $109,937, almost $110K. That's crazy. And every single year, this portfolio is generating $3,557 in dividends, which if we compare this to the projected income from this time last month, that represents a $58 gain month over month. That's a pretty big jump. And if we look at this on a year-to-date basis, so far in 2025, we've added $493 in projected annual income since the start of the year. Now, if we have another month like this last one, if we can somehow pull off another $50-ish jump in projected income, that will put us over the $3,600 mark, which was my goal by the end of the year. That averages out to $300 a month. I really want to get there. And we only have 43 bucks until we're there. It's really not too much. So September could be the month that we officially cross over that. We'll see what happens, guys, but feeling good about it. All right, guys, now getting into my watch list, I actually did add one new company to this watch list in the last month, and it's this one right here, FDS, which is FactSet Research Systems. As we can see, this is a very high quality company with a snap score of about 7.5. So really like that. And it's seen quite the pullback year to date. It's down almost 22%, and it's sitting right there at its 52-week low. And overall, it's been a pretty solid grower too. I'm actually telling you more about that in this next video right over here, where I'm breaking down why FactSet is at the top of my list of dividend stocks to buy in September, along with two other killer dividend stocks that I think are also worth a look right now. So click right over here to check those out, and I'll see you in the next one.